MicroVision, ticker MVIS, has done a massive run before, going from around $1.90 to around $8.20. And again, this all happened in about a month and a half. Since then, all we have done is now sell off, and it looks like we're pushing back down to that kind of a 3-month low of $1.88. So what are we paying attention to as levels on MVIS? So right now we do have a support at 230. The volume is quite weak today, so it was something I was looking to day trade. Kind of just stepped away from it just again because considering it's trading a bit more like a barcodey sort of stock, which again is not something I want to be day trading at all. But if volume comes in, then again that could be a key level to be paying attention to. But if we do continue lower, we have more supports, and that's going to be at $1.70 and $1.38. So that's kind of more what I'd be paying attention to on this stock, because when you come into these blue lines, these are second deviations. This is a lot higher probability that we get a bounce, and the reason for that is if you understand standard deviation, you know that 95% of data should be above that second deviation. So again, if you come into these kind of lows, that's where we would more likely start to see a bounce. You can quite often get a bounce at these first deviations as well. But again, if you understand standard deviation, that first deviation, it has a 68% probability. So again, it's a lot more chance that these levels work out than this one. So again, we can trade it, but we'll tend to use reduced size. So 170 support and 138 is what I'm paying attention to from a support side. Now, if we start to push up, if buyers start to step in now and we start continuing to the upside, then what are some resistances we may want to be paying attention to? So we have $2.80 and $3.25. Now, this would take us into fair value, this $3.25. So if I was long bias, if my average is anywhere below this, that would be my absolute final target. I would look to take my profits coming into $3.25, just because again, if we're reversal traders, we're using standard deviation, which is a reversal way of looking at stocks. Once you come into this value, it's a gamble which direction we go, so it wouldn't really make sense to be holding stocks past this level. So that would be kind of the fair value which I would target. And if we do go higher, obviously the range of fair value does normally have two areas, so that's 325 to 390. But again, if we're trading, we tend to just trade into that first one to reduce the gamble kind of probability. But just to note as well, 425, this is our first deviation on the 1 year. So as soon as you start coming into this area, this is where you're considered a lot more overbought. And then we can start looking at the stock short bias. Again, it is hard to borrow, but it does have options. So even if we're paying the elevated price to short the stock, we can always define that risk with the options, which can make it a good stock potentially short if we start to squeeze out. And again, to consider it squeezed out, normally when we're at that, going to be at that 425 area or above.